Welcome to the program, Treasurer.
Nice to be with you, Annabel.
Well, ball's in your court. You've made an announcement overnight about deeming rates. Why is it reasonable?
Well, look, we're strengthening the arm of around 1 million welfare recipients, including about 630,000 pensioners. This is about lowering the deeming rates, which will be good for them. The benefits will start to flow from September. They'll be backdated to the 1st of July. It'll cost the budget about $600 million. But pensioners will be better off by up to $804 as a single or more than $1,000 as a couple.
So you've lowered the top rate from 3.25% to 3%. The cash rate's at 1%. Why is there that disparity still? Well,
there are two rates. There's a lower rate and there's an upper rate. And the lower rate is being reduced to 1% for financial assets up to $51,800. Yep. And the upper rate's being reduced, as you say, to 3% for those assets above. But what's important to understand, it's not a linear equation between or comparison between the cash rate and the deeming rate, because the deeming rate applies to a whole suite of assets. So it applies to bank deposits, and a term deposit could be at 1.75% today, or could apply to superannuation returns, and that's averaging around 5.5%, or to yields on ASX 200 stocks, which are averaging about 4.5%. So Anne Ruston has gone through the proper process. We think this is a good outcome. Indeed, the Council of Ageing, Ian Yates, has said today this is a positive outcome. It will be to the great benefit of so many people across the economy. But what we will not take is a lecture from the Labor Party after their $45 billion retirees tax.
Okay, you say that the rate isn't directly comparable to the cash rate, but through the entire years of the Howard government, the top deeming rate was equal to or less than the cash rate. So in 96, cash rate was 7.5, deeming rate was 7. In 2004, cash rate was 5.25, deeming rate was 5. It was significantly below or equivalent to the cash rate. Why have we decoupled those two rates, and why aren't pensioners entitled to understand that the cash rate will represent their deeming rate?
Because, as I said, it applies to a suite of financial assets.
But why has that changed? Like, why is that different from the
Well, we've actually seen, the ASX 200 is up 12% through the year. So we've actually seen very strong returns for super funds, for managed funds, and in the stock market. And as I said, it applies to a suite of assets. But when it comes to the cash rate, let's not forget the Reserve Bank held it pretty steady for nearly 3 years. It only came down in June and then the subsequent month.
So it's come down 5 times over the course of 4 years. So it's quite a long time to wait to catch up. I mean, you went through a whole election campaign talking about Labor's retiree tax, but you were kind of skimming off pensioners at the same time, weren't you?
Well, at 1.75%, which it was, and now it's going down to 1% for the lower deeming rate, we think that's a very good outcome because, as I said, you can get a 6-month term deposit today for 1.75%. So even a term deposit is above the lower deeming rate. But as I say...
Can you get a term deposit for 3% anywhere? Can you name a bank that offers a 3% rate for a term deposit?
Well, you're more likely to get it between 1.75% and 2, right, or just above 2.
So no.
But it's about a suite of assets, Annabel.
So aren't you pushing pensioners then into more high-risk investments? You're saying, don't get a term deposit, go and have a flutter on the share market. Is that really a good signal to send?
I wouldn't call superannuation a flutter on the share market. I'd actually call putting your money, whether it's an industry fund or a retail fund, that can be quite a secure investment. In fact, that's what most Australians do, and it's growing rapidly. So I think superannuation, managed funds, I think they are providing better returns than putting money in the bank. But this is quite a significant change. This is a $600 million hit to the budget. And it will benefit over 4 years, but it will benefit around 1 million welfare recipients, not just pensioners, but a series of other welfare recipients.
It seems like a massive rigmarole that we've all gone through. Like, it's been years while interest rates have been coming down and pensioners have been feeling the pinch, and you've now got around to changing the deeming rates. It's a very murky process. Aren't pensioners entitled to know what goes into this decision-making process? And do you back the support of do you support the idea of some sort of independent body where there's some sort of clarity to these decisions?
No, we don't. We think the appropriate process is the current one. And
what is the process? Like, who makes the decision and why?
The Minister for Social Services is the responsible minister. Her and her department receive advice. There's input from other departments, and as required. And it's a process that has served the country well. And I note that the Labor Party have had mixed messages on this, because you've had Linda Burney saying one thing and Jim Chalmers saying another. He supports the current process just as we do.
Listen, you mentioned superannuation. There's been a bit of chat this week about the program for the increases to the superannuation guarantee. So I just want a quick confirmation. Are you still committed to the process of increasing the superannuation guarantee to 12% by 2025, I think it is?
We have no plans to change that legislated increase.
So that's what will happen by 2045?
Well, we've got no plans to change that legislated increase. But what is really...
You currently have no plans, but you could develop some?
You're very cynical. But
well, I have experience.
Oh, right. We have no plans to change the legislated increase. It goes to 12%. But what we saw from the Grattan Institute this week was an interesting report, obviously, on this very point. Because what we need to fully understand with this increase is what is happening to retirement incomes, what is happening to the nation's balance sheet, what's happening to the nation's savings. That's why the Productivity Commission recommend that there be a retirement incomes review, and that's something that the government is supportive of.
So it's important to keep those factors in consideration when you're making your decisions about what's going to happen by 2025?
Well, again, it's already a legislated increase, but what is important is that we continually stay abreast of the impact of those changes on retirement incomes, national savings and the national balance sheet.
So can you guarantee we'll be at 12% by 2025?
Well, like I said, we have no plans to change it, and it's already legislated.
Okay, right. Just wondering if you can explain why it is that you orchestrated this joint media appearance with the Reserve Bank Governor this week. I can't remember another instance of such a thing happening ever.
Well, I think you'd find it strange if I wasn't sitting down with the Reserve Bank Governor. I mean, he and
with
I...
the bank of cameras, though?
Well, he and I, we had a 2-hour private meeting with senior Treasury officials, and the economy is facing a number of challenges, and it's important that we continue to swap notes and to work together in understanding the different the developments that we're seeing across the economy. Both Phil Lowe and I were recently at the G20 finance ministers and central bank meeting. Central bankers meeting. We had a number of engagements there, and it's important that we continue to talk. And where we're absolutely aligned is, while the economy does face some significant challenges, and I'm talking about the impact of the droughts and the floods, I'm talking about the global trade tensions between the US and China, I'm talking about the softness in household consumption. The fundamentals, in Phil Lowe's words, of the economy are strong. And we also know the foundations are strong. And the Australian economy is in its 28th consecutive year of economic growth. We have a AAA credit rating, one of 10 leading countries to have that AAA credit rating. Phil Lowe said a record number of Australians are in work. And we're
say that, by the way. I mean, I've noticed you say that
to see
quite a bit,
the economy grow.
A record number of Australians are in work, and it kind of sounds like you're saying that unemployment's at a record low, but it isn't, because, I mean, unemployment's at 5.2. 10 years ago it was at 4.2.
Well, when we came to government,
are
it
in
was 5.
work because there's record numbers of Australians, right?
No.
But actual hours worked have gone down. So, I mean, the actual amount of work being done isn't at a record.
Well, actually, when we came to government, unemployment was 5.7. So it's actually come down since we've come to government. We've created over 1.4 million jobs. If you look at the last 12 months, 8 out of 10 of those jobs that have been created have been full-time. And importantly, workforce participation is now at a record high, around 66%. Record number of women who are in work, and a record number of young people are getting a job. And that's not by accident. That's actually by creating the environment where employers feel comfortable making extra hires, and also ensuring that our Australians have the skills that are necessary to be hired.
So you've got together with the Reserve Bank Governor. Did you ask him to that meeting? And
yes, I did.
Was he okay with the cameras being there? I mean,
absolutely.
Right, okay.
And, you know, the Reserve Bank Governor, Annabel, is of independent mind and independent voice.
And he agrees with you on nearly everything, apparently.
Well,
tell me, is this the end?
I mean, to be honest, I wouldn't be so condescending or cynical about the Reserve Bank governor.
Right.
The bank is independent. It sets monetary policy, and we don't seek to influence that in any way. And Governor Phil Lowe is a very respected figure, and treasurers, prime ministers have productive and constructive dialogue. The fact that we sat down for over 2 hours, exchanged notes on the economy, went through in detail the infrastructure pipeline, is a positive development, not to be looked at in any other way.
So is this announcement today of yours on deeming rates, is that the end of your measures that will stimulate the economy?
Well, the deeming rates are not about, Annabel, stimulating.
No, I understand that, but they'll have a stimulatory effect, right? Because you've put more money into the pockets.
It's money into the pockets of 1 million welfare recipients. I mean, for somebody who's got a home, who's a pensioner, who's on about $280,000 with financial assets, that person will be about $480 a year better off. So it's money that will flow into the economy, and it comes off the back of the tax cuts, which is $8 billion into the economy, and more than 1 million Australians have already put in their tax returns, a record number,
right.
and the interest rate cuts that Phil Lowe has overseen. So all
is
of that is
the
positive.
end of the sort of suite of stimulatory measures? I know there's been discussion this week about whether that's enough, and you and the Reserve Bank Governor seem to feel that it is at the moment.
Well, what will be interesting to see how the tax cuts play out across the economy.
Sure.
But what's really important, Annabel, is the Prime Minister and myself and Matthias Cormann and others, we're all very conscious of the challenges that the economy was facing when we put the budget together. But the budget handed down on April the 2nd was our economic plan to take the country forward. And that is what we'll continue to implement, including the $100 billion worth of infrastructure spending.
So you have we've just completed the 2018-2019 financial year.
Yes.
You projected a $4.2 billion surplus. Is that what it looks like it's going to be? Deficit, sorry.
Well, I mean, I wouldn't get your hopes up about a surplus, and we're very much managing expectations around that. What we have seen is very much an improvement in the 18-19 results, because when
to break even.
Well, let's wait and see, because the final budget outcome won't be out until September. But when Scott Morrison delivered as Treasurer the 18-19 budget last year, what he did say was there was going to be a $14.5 billion deficit. Then, as you say, in this year's budget it came down to $4.2 billion, and we've seen improvements since that time.
Could it be less than $1 billion?
Well, again, I'm not going to put a number on it other than say there has been improvements. Don't get your hopes up for an early surplus. The surplus year that we're aiming for is 2019-2020, but the economy has been held by strong terms of trade and a record number of Australians in a job.
Okay, so I want to ask you quickly about the big story this week, which is about reconciliation. And the Indigenous Australians Minister Ken Wyatt announced on Wednesday that Australians would go to a referendum in 3 years. Why wasn't that promised during the election campaign? There really wasn't a mention of it.
Well, what we've always said is that we will work through the Parliamentary Joint Committee recommendations that Pat Dodson and Julian Lisa co-chaired. But Annabel, I think as a country we have a unique opportunity now. We've got a Prime Minister who has already reached across the political divide and met with Anthony Albanese and has said he wants to advance these issues. We've got the first Indigenous Minister in the Cabinet who's responsible for Aboriginal Australians in Ken Wyatt, who's got a friend across the chamber in Linda Burney, and then you've got that Parliamentary Joint Committee. But the detail of the so-called voice has yet to be fully worked out, but they do need for this process space and time. And we also know that constitutional reform is really difficult. Only 8 out of 44 referendums have been successful, and we haven't had a successful referendum since 1977.
Do you feel that Ken Wyatt's been given space and time this week? A lot of your colleagues have been very vocal.
I thought he gave a very good, passionate, personal speech at the Press Club. I think he's the right person for the job, and I think he has got that space and time. But as we do know, there are a lot of constitutional conservatives. I would count myself in that camp. The Prime Minister has said he's in that camp, and many of our other colleagues. So we do need to proceed very carefully, because what we need to do is to build bipartisanship and to capitalise on the goodwill. And I think Noel Pearson described it as the radical centre.
Do you think that this question of the voice to Parliament is being characterised as a third chamber unfairly? Well,
I mean, what we haven't got is the full detail on that. And what we do need now is the process to have a discussion to work out what the model is, got the right people in charge, but we do know constitutional reform is very difficult.
Okay, well, thanks very much. We're completely out of time, I'm afraid, Treasurer. Thanks for being with us today.
Good to be with you, Annabel.